Financially raw, real, authentic wisdom with Lawrence Oberholzer from Retire Rich and Happy.
Good morning, everyone, and welcome to Financially Raw. As you can hear, I sound a little bit better today than I did last week. We only did a half an hour show because my brain just did not want to work anymore. So today we're going to have a full show going up to 10 o'clock. And thank you everybody for joining us. You are welcome to give us a shout out on the website. Tell us that you are listening. If you have any questions regarding our topic, and I'll share with you what our topic is going to be now. Very exciting topic. You are welcome to send it to us on the website, and our guest in studio will definitely answer you. So in studio today, we have Gideon Groenewald. He is a tax expert. So Gideon, welcome to the show. Tell us a little bit about yourself, who you are, where you're from, why you have a passion for tax, because I know you're very passionate about tax. So if you want to share with the people a little bit about who you are and what we're going to chat about today.
Morning, Lawrence. Thank you for that huge introduction. I'm a registered tax practitioner and accounting officer. I like law. I like to know how you can navigate it, how you can go about it, and things in life just needs to make sense.
Make it work for you.
Exactly, and tax is exactly that. It needs to make sense. It needs to work, it needs to fit in, it needs to work for everybody, for myself and the person that I help.
Yeah, I think a big thing with tax is people are so scared of tax that they don't even try to find ways to pay less tax. They just pay because I just don't want issues with SARS, and I feel that is a completely different, a wrong attitude actually that people should have.
Yeah, definitely. SARS is not out there to get us. They're just there to collect their fair share to give to government.
Fair share.
Remember, SARS is a debt collecting agency for government.
Yes.
They don't create laws, they just apply it.
Yes. Okay.
SARS is not always fair, but they try their best.
Yeah. Okay, so like you guys here, we're going to talk everything tax. So if you want to find out how you can reduce your tax burden legally, we're not going to give you ideas on how to not pay your legal share of tax today, but we're going to talk about how you can reduce your tax burden legally and give you some tips and tricks. So if you have any questions, I know people will have questions today because this is something that I think all of us don't like to do. We don't like to pay tax, any kind of tax, because there's so many hidden taxes that we don't even know about. And if we can reduce the money we have to pay for tax, why not? You're going to talk a little bit about, let's start with this individual auto assessment that was started in 2020. What is the benefits? How does it work? Is it worthwhile looking at it? And what is it? What is auto assessments?
Yeah, so SARS started rolling out this auto assessment last year, and a lot of taxpayers has contacted me, and I've realized they don't trust SARS in this auto assessment.
Yeah, they're going to just put in figures and deduct more money than should.
Exactly, and they're scared of SARS, so they just forward me this auto assessment. They're like, help, I have no idea what to do. And in most cases, what I found, if you're a salaried employee and you only receive one income, and that may include an annual bonus, most of your documentation, like your medical aid certificate and your retirement or your pension fund contribution certificates, are all sent to SARS.
Automatically updated on the system.
Exactly.
Basically.
So SARS has got all the information to automatically assess you without you having to want to claim. If you don't have additional expenses to claim or additional income to declare, chances are that auto assessment is correct.
Yes.
Then it will be to the individuals a benefit to accept it, because then you don't have to pay a tax practitioner to do the calculation just to confirm that what SARS has done is correct.
Correct, yeah. So when, let's say, for example, this year you feel that, listen, I didn't have any major issues, so I'm just going to accept the auto assessment. Next year, I don't have to accept it again. It's a year by year. You don't say I accept auto assessment and then it's there. Then you have to deregister or something for it.
Oh, no. It's just a year-on-year functionality that SARS has introduced. You can even object to the auto assessment.
Okay.
If SARS has assessed you, according to the Tax Administration Act, you can still object against that assessment. So it's not cast in stone.
Okay, so it's not like I say, well, I'm accepting auto assessment and now for the rest of all time they're just going to put auto assessments through.
No,
Every year
no.
I have the opportunity. What are the kind of things that a individual that has a normal employee that has a salary and a pension fund and a medical, what kind of things could have happened during the year for them to not need to accept that auto assessment? Things like extra medical expenses or things. What would cause somebody to say, listen, I might have extra expenses that I can claim, so let me not accept this auto assessment?
If you have a disability as defined, either a permanent disability or a temporary disability, just make sure you've got the disability disclosure document form that's signed by your doctor.
Okay.
If it's a permanent disability, you just need to submit it to SARS once because it's permanent in nature. If it's a temporary disability, every year, unfortunately, you will have to submit one of those. And that changes the way how your medical tax credit is calculated.
Okay.
So you get an extra benefit in that. Other stuff that you might, if you've got rental property that you get income from, SARS won't know about that.
Yes.
And please don't try and hide that from SARS, because when you do purchase a property, you do give SARS your income tax reference number, so they can keep track of that.
Yeah, they will know.
They will know. And SARS can penalize you for under a declaration as well.
Yeah, that's never a good thing. So yeah, a lot of people think that it's purely in their best interest not to declare certain incomes, where they should actually look at it more of, well, the fact that I have more income potentially gives me more deductions as well, because now I have a rental income, but that property, the expenses on that property, the interest on the bond, those kind of things I can then claim back from SARS. So if I don't declare the income, I don't have access to the deductions either. Am I right?
That's correct. So if you do have, let's say for instance in South Africa, a side gig, a job on the side, additional to your income, and that side gig hasn't grown to a profitable position yet, you can deduct that loss against your taxable income, and in that you get refunds from SARS. And remember, people get this confused a lot. You can only get a refund if you pay tax. SARS is not in the business of handing out money just for submitting a tax return, saying thank you, well done, there we go, 50 randjies for you.
Yeah, so if you have your own small business and you don't pay any tax over to SARS, you can't then claim back 10,000 Rand from SARS. They're not going to say, well, there's 10,000 Rand check or an EFT for you having a business. You have to have paid some tax to actually claim back, but you can reduce your tax liability through the amounts that you claim back. So I think this is something that I want to really delve into a little bit. We'll take a few minutes and really get into this whole thing about everybody starting, or people starting, a part-time business, a side hustle, something that generates some extra income. There's a lot of confusion regarding that. There's a lot of fear with people to do that. They will start a side hustle and then they won't declare the income. They'll sort of try and do it on the down low because they don't want to pay the extra tax, but then they also don't claim anything for it. So let's delve into that a little bit. Would you, in your expert opinion, suggest that people get a side business, a side hustle, something that generates extra income for them?
Yes, definitely. It can only help you with your cash flow. It can only help you to broaden your sources of income. I think one of the most talked about thing, if you want to become rich one day, is be financially independent. And the way to achieve that is to broaden your sources of income.
We call it MSI, multiple sources of income. You have to have MSI. You can't just work with your PSI. PSI is your primary source of income. Most people think that if I just save enough of my primary source of income, I'll be fine. And that's never going to work. You have to have multiple sources of income. And one of the big things when you start getting multiple sources of income is managing your taxes correctly. Otherwise, it's going to kill you. So get your taxes sorted out. So what are the kind of things? So I'm a salaried employee. I have my typical pension fund that I'm contributing to. I have my medical aid through work. As a salaried employee, what else can I claim back from tax every year? What other deductions can I have? I'm just now a purely salaried employee.
So a salaried employee is very limited in what they can deduct. Medical expenses, pension fund or retirement fund contributions. It's very limited really in what you can claim.
Yeah.
If you're a commission income earner, or you are independent contractor, or you've got various sources of incomes, then you can start playing with different kinds of expenses, such as petrol that you use for business purposes. If you travel from your house to a client, that's business purposes, but traveling from your house to the office is private person. So then you can start deducting stuff that normally will come out of your own pocket, can reduce your tax liability. Home office expenditure.
Yes.
There's specific rules around that when you can claim it, but it opens you up for more deductions than what a salaried employee can do.
Yeah. And that's the thing, and a lot of people, and that's the benefit of earning commission or some kind of a commission, because immediately if you are employed but a portion of your salary or your whole salary is built up on commission, you suddenly have expenses that you can claim back. How I usually explain it to people, I say any expense that you incur in the generation of an income can be deducted from that income as a taxable expense. So if you are spending money to generate income, that spend can be deducted from tax. Am I right when I say it that way?
That's correct.
Yeah. Okay, so Gideon, when you start a part-time business, what are the kind of expenses that you as a person can now suddenly deduct from tax because of the business that you start?
Just before I give a brief explanation on that as well, you have the option when you submit your tax return to ring-fence your losses or income on a specific, let's call it the income silo.
Okay.
So you've got a salary that you receive and you get a business income you receive.
Okay.
So that business income, let's say, is a second silo of income. If that is constantly a loss, you've got a choice. Either you can tell SARS, keep track of this loss. I don't want to utilize it against my taxable income. I want to keep this for the day that I do make profits.
Okay, so you then roll it over to the next year.
Yeah, but that's an option. You don't have to. You can offset it against your salaried income and then get that tax refund to help you with your cash flow and maybe grow your business. And you've said that basically correctly, any expense in the production of income.
Okay.
If you have an expense that you have that you normally would not have had if you did not have this business, you can deduct it.
Okay.
So with regards to traveling as well, obviously use your very same car that you travel for business purposes and for private purposes. SARS will require you to keep a logbook, just to keep track of what's personal and what is for business purposes, so that you can split for private and business purposes.
And then once you have that logbook, the expenses on that car get split in that percentages, all the expenses of the car.
That's
you put
correct.
Tires on, fuel, services, insurance, all of those things. So guys, let's say for example, you can prove through your logbook that 30% of your travel is for business purposes. Then 30% of all your expenses on your vehicle can then be deducted from tax.
That's correct.
Basically, SARS is refunding you those expenses, not directly, but in a sense, refunding you those expenses.
Yeah, that's correct. We call those running costs. So anything you put into your vehicle to keep it going. But there's another hidden expense, a free expense.
Yes,
it's called
I like free expenses.
It's a wear and tear.
Okay.
So it's a proportion of what you use for
The
business,
value.
of the value of the vehicle that you can write off over a certain period of time.
Okay, so like what do you call it? Waardevermindering, they call it in Afrikaans. Depreciation. That was the word. See, your English isn't that bad. So the depreciation of the value of the vehicle because you are using it, and that percentage also gets deducted.
Yeah, any capital item that you buy. So a capital item is something that you're generally going to use
like a printer at home.
You're going to use it for more than 12 months. that also you can write off that cost on the period that SARS allows it, 3 years, 10 years, but every year it's basically you need the equipment, you're going to invest in that capital expenditure, but you can write off that value over a certain period of time. It doesn't affect your cash flow, but it's a basic, I call it a free expense.
Yes, exactly, because it becomes worth less and less and less, and you're getting that, and they're basically subsidizing that capital expenditure for you because that thing is becoming worth less. If you can give us a list, or the listeners a list of some of the expenses that they will suddenly be able to claim back once they have a home-based business. What are the kind of things that they now can claim back which they couldn't claim back when they were just a salaried employee?
Okay, so if you've got a home office, if you're renting a property, you can claim back a portion of that rent. If you're a homeowner, a portion of the bond and the bank fees. Unfortunately, the interest. And the bank fees. Unfortunately, not the entire bond repayment, because the majority of the repayment is capital in nature, which is not an expense.
But in the beginning, when you just buy the property, the biggest portion is interest. So then it's good, because that interest you can claim back.
Yeah, and sometimes that interest will work out more than what it would than you going to renting a small office. If you've got cleaning staff at your house, you can proportion that to some of your expenses. If entertainment expense, if you take a client out to lunch, to dinner, that is also a deductible expense. Just to jump back to the home office expenses, it needs to be proportioned.
Yes.
So if you take the home office that you have, and that's a percentage of the square meterage of the entire house.
So it's the entire house, not the property. Doesn't include the garden and the whole thing. It's the house square meterage.
It's the buildings.
The building.
All the buildings on the property, excluding the land. So it's not the land.
Square meterage.
But all the buildings. If there's more than one building on the property, you need to consider all the buildings.
Oh, okay,
in the
like
property.
if you have a granny flat or something.
That's correct.
Part of it. Okay.
Yeah. You can claim internet as well, telephone expenditure. It's a bit difficult because usually with your uncapped internet, it's you pay a fixed amount every month, and it's difficult to
proportion.
Not proportion to prove that this is for private use, this percentage was for home office use. But that is also what I usually tell people is get to. I know it sounds like a stupid expenditure, but if you have, let's say for instance, uncapped fiber at home, use that solely for business purposes, get a 3G or different type cheaper limited, which you use for private purposes.
Okay. Couldn't you just take your fiber and also take that same percentage that you have your office and justify that you might, let's say for example, my home office is 20% of my total area of the house. Couldn't I then justify and say, well, 20% of my fiber I'll claim back as well?
You can try that, but I don't think you'll be successful in that because if you watch Netflix over the weekend, you're going to use much more internet than sending and receiving emails during the week. So that one is a bit tricky when it comes to the internet, but that is also something you can claim.
Yeah, one of my opinions and approaches to tax is always ask for forgiveness rather than permission. So you try, and if they say no, you say, oops, sorry, what should I do? So that's just me personally. Use it, don't use it. Okay, so those are some of the expenses. Also, we've spoken about vehicle expenses. That's a big one. If people start to be able to claim back some of their vehicle expenses, that's huge. It suddenly becomes a big expense that can be claimed back. Now, this is another thing that I see a lot of people battle to understand. They think that if I have 10,000 rands worth of expenses that I can claim back from SARS, I'm going to get 10,000 rand from SARS because this is my expenses. And that's not how it works. So if you can just explain to the listeners, how do they calculate what you're going to get back from SARS?
If that's the way it worked, I would be every expense I can think of, I will try and squeeze in there. But no, unfortunately, it doesn't work that way. So if you've got an expense, the expense is deducted from the income to arrive at a taxable income.
That's okay.
Then you are taxed based on scales. It depends on how high that taxable income is. and a percentage of that is applied. So no, if you have 10,000 rands in expenses, you're not going to get 10,000 rands back in from SARS. You're going to get a proportion of tax back.
Yes.
In that, it depends on what tax bracket you fall on. It's sometimes that expenditure might even move your tax bracket lower. So that your taxable income is in a tax at a lower rate, so you get a higher refund if you do have a fixed salary or a constant payment of tax.
Yes. So if people want to do a quick calculation in their minds, it's basically what your total expenditure is that are approved to claim back, multiplied by the average tax rate that you are paying. So if you're claiming back 20,000 rand and your average tax rate is 20%, I'm not saying it is 20%, it just makes my maths easier, you'll get back about 4,000 rand as a refund from SARS.
Yeah.
But the important, and you said it earlier, but I just want to reiterate it again while we're at this point, is that, guys, please remember, you can't claim from SARS what you haven't paid.
That's
you can't
correct.
pay them, let's say your salary, you only pay 30,000 rand tax for the year. And now with your business expenses and everything, you have a 50,000 rand claim. SARS is not going to give you the balance of 20,000 rand as an EFT into your account. You can only claim what you've actually paid towards SARS.
Yeah, it's interesting that you mentioned that. I've got a client, she is a sole proprietor, so she's got one source of income. And every year she's making a loss. And she's like, okay, but I'm making a loss, why submit? I'm like, because SARS accumulates those losses. So by the time you do make a profit, you can offset that accumulated aggregate losses. You can offset that income against it. So you'll make profits for the next 5 years and offset it against previous losses and not pay tax on it.
That's sometimes what these big corporations and companies do. When a company goes bankrupt, they buy the company from the owners because that company has a tax loss, and that tax loss is actually an asset, and they then use that asset to write off tax in the future. So people don't think that if you have a loss you shouldn't submit your tax returns, because that is an asset in your company, because that tax loss gets carried over to the next year and the next year. Questions I always get is, where should I register my sole proprietor, or should I go register a sole proprietor? So I think just explain to the listeners what a sole prop is, and how do you start a sole prop against what a company is, a PTY. I know you can't do CCs anymore, although you can buy shelf CCs, but a PTY. What is the difference, and when should you register one or not?
I must say that's also the very top question that I get asked. People call me, I want to register a company, and my question is always, why? Because a company is a registered entity. That's something that you need to register with the Companies and Intellectual Property Commission of South Africa, CIPC. And that thing needs to be maintained. That company needs to be maintained. Every year there's a fee. Financial statements, independent reviews, if you reach that point, it costs money. So I would usually tell people, if it's something small, just go a sole prop. So if you're a sole proprietor, you and your business, you're the same. You're indistinguishable. Your income is the business income is your income. Your liabilities, your business liabilities, your business liabilities is your liabilities.
Yes.
So with a company, there's a separation in the legal responsibility. With a sole prop, there's not, but that's not something to be alarmed about. It's a small company. You're not going to go out and make millions of rands of debt.
They're not going to give it to you in any case. Even if you start a company, they're still not going to give it to you initially. So you can just as well do it as a sole prop.
Exactly. A sole proprietor is a legal recognized business form in South Africa that does not need formal registration.
That's important. It doesn't need formal registration. You don't have to go somewhere and register your sole prop. You can decide, I am now going to start selling Cook Sisters at the school on Saturdays. Then you can start selling Cook Sisters at the school on Saturday. You don't have to go register somewhere.
Yeah. If people say they want to register a company, I say go as a sole prop. They're like, okay, how do they do this? I'm like, just do it. Just do your business. Don't worry about the admin. We'll sort that out later. And if you do feel that your sole prop is growing to a point that you do start to get worried, speak to your broker, speak to your accountant, your tax practitioner, and they will guide you if it is necessary to start to think about registering a company yet. And even if you do have a partner in this business, you are allowed to have a partner in the business without registering the business. That's called a partnership. So it's the same simple simple format as a sole proprietor. You just have someone else in there. I will highly recommend you draft a partnership agreement,
yes.
because people and money, there's always going to be drama.
The thing is, when they want to get into the business, everybody likes each other, and then the moment things don't work out a couple of months later, then suddenly, but you said this and you said that. Always better to have that partnership agreement drawn up when you're still on good footing. Don't try and draw up a partnership agreement, because that's what people do, is they get into arguments and then they want to start drawing up a partnership agreement, and then it becomes a fight. So do it in the beginning and get it done.
No, I fully agree, and it's important to stipulate your split of your interest in the partnership as well. Let's say, for instance, you've got a sister or a brother involved. They stipulate that they only entitled to 20%. That means they're entitled to 20% of the profits, 20% of the liabilities, 20% of the assets. If there's no agreement, it's just going to be assumed 50-50.
Yes, exactly.
And you don't want, if this is your brainchild, give away majority. It's like being married. If you don't have a contract, then you're married.
Yeah, you're immediately in community of property, and then what's yours is mine, and what's mine is mine, and what's mine is yours.
Something like that.
Yeah. Okay, so sole prop. So the other thing that I feel when people start a part-time business, and why I always say start with a sole prop, is where you said that you can have a choice if you have a loss in your business, because most of the time, let's be honest, once you start deducting these expenses that you probably didn't deduct in the beginning, you're probably going to have more expenses than what that business actually generates in the first year or so, which is actually what you want. And then you can have that choice of either rolling it over to the next year or deducting it from your normal salary if you want to. And that is only easily done when you are a sole prop.
You can only do it when it's a sole prop. You can't do it when it's a company, because a company is a legal form in itself.
Yes.
The company earns income. The company pays taxes. A sole proprietor, you earn income, you pay taxes.
Exactly.
If a company makes losses, that losses can roll over and
for
only
that company.
For that specific company.
Yeah.
You can't absorb it in your personal capacity.
So if you want to have the maximum opportunity to get tax refunds and everything, do a sole proprietor, and then link the two together with if there's a loss in your business, deduct it from your personal income tax.
There's a small disclaimer on this topic. If you're a high income earner, in other words, you are in the so-called super tax bracket, the 45% tax bracket, this ring fencing will not, your income will be ring fenced automatically by SARS. Where's that tax bracket about? If a person earns more than what amount about? It's 1.577 million rands per annum.
Okay.
That translates to 131,000 rands per month.
And I'm sure that most listeners, I mean, if you look at the high net worth individuals kind of thing, it's a very small percentage. So most listeners that are listening will not have that issue. You will be able to do the deductions as per normal. Okay, so now the next thing is, now you have your sole prop, you have your business, whether you've decided to start a business or a sole prop. What are the kinds of tax out there that we are paying? What type of tax do people need to look at over and above just income tax? Because people get confused. What's VAT? What's income tax? All of these capital gains tax. What kind of taxes are there?
People do think if they're registered with SARS, they are registered for everything with SARS, and that's not the case. If the chances are, if you're registered with SARS, you're registered for income tax. There are other taxes as well. Pay as you earn. So pay as you earn is a withholdings tax. That tax doesn't belong to anybody. It does not belong to the employer, nor does it belong to SARS. It's just basically a pass through, deducting and paying it over. Okay, pay as you earn, you register for when you have employees. As an employer, as a business owner. An individual will never have to worry about registering for pay as you earn unless you have a business and you have employees.
Even if that business is a sole prop, if you start employing people in that sole prop, you have to then register for PAYE.
That's correct. With the pay as you earn registration, you can register for UIF and STL as well. That is just because you're registered for UIF and STL with SARS does not mean that is the end of your statutory requirements. You need to submit documentation to the Department of Labor as well. That's beyond my scope of expertise. But If you register for pay as you earn, that's when you deduct taxes from your employees and pay it over to SARS. Another one that you will most probably deal with is VAT.
Yes.
So a lot of people come to me and they're like, I want to register for VAT. And I'm like, but why? It's like they're applying for this tender and the tender said they need to give a VAT registration certificate. It's like VAT is a very admin intensive tax. So my advice to people is wait until, so the legal requirement is if your annual turnover for any 12-month period, doesn't need to be your financial period, it doesn't need to be a calendar year, but any consecutive 12-month period exceeds.
So it's a rolling 12 months basically.
That's correct. If it exceeds 1 million rand, your income, that's which you invoice clients, exceeds 1 million rands, then you're legally required to register for VAT. If you do not meet that minimum requirement, do not register for VAT, because people get fixated on this input VAT. They can claim VAT. But chances are, if you have a lot of inputs and you charge clients, then you're probably going to pay more to SARS than what you can deduct against it. You might now and again have a capital expense, a large purchase for the business with a big input, but 1 month's claim from SARS on a VAT purpose is not going to justify registering for VAT, because if you look at a 12-month period, you're going to lose out.
Yeah, it's 6 VAT returns that needs to be done, paid for, all of these kind of things that's going to cost you. And there was a thought that I had when you was talking about the VAT, the input. I think when you have companies that like high manufacturing companies that buy a lot of stock and a lot of things to manufacture with, or retail companies where there's a lot of stock that needs to be bought, then I think VAT is more beneficial if you want to, because you've got a lot of input tax. It's input VAT. Always get confused which one is the output and which one is the input. But if you're a service-based company that basically you're a hairdresser, so a hairdresser doesn't have a lot of stock and things like that, it's more service-based, then you're probably going to have more issues with your VAT than what you're actually going to benefit from the VAT. Am I right saying that?
No, that's correct. And VAT is a constant, it's a moving thing. So I would always recommend, if someone registers for VAT, get yourself an accounting system, because you need to keep record of those inputs and outputs. But once again, it's cost. It's additional admin. You're probably going to have to pay someone to do this as well, because you want to focus on the business parts. So once again, VAT, if you do not need to register, please do not register. If someone asks you for a VAT registration certificate, just tell them, sorry, I'm not legally, I don't meet the legal obligation to register. Your cost will still remain the same for them. There's your customer is not going to lose out on anything unless they're not if you're VAT registered, if your client is not VAT registered, they're going to lose out. But if you're not VAT registered, your client's definitely not going to lose out on anything.
And that's the thing. What people must also just remember: if you are not VAT registered, you cannot charge somebody VAT.
That's
you
correct.
Can't put a VAT amount on your invoice if you are not VAT registered, because I've seen that before as well. They charge somebody 10,000 rand plus 1,500 or 1,500 rand, 1,550 VAT, and then but they're not VAT registered, so you can't do that. That's fraud. That's tax fraud.
What I tell people usually, if you're not VAT registered, don't mention the name tax or VAT on your invoices. There are specific legal requirements that an invoice need to meet to be a VAT invoice.
Valid VAT invoice, yeah.
That's correct. So don't put their tax invoice, don't put their VAT invoice, don't put their inclusive of VAT, exclusive of VAT, or VAT value. Just say invoice and total.
And the amount. That's
exactly
it. Okay, so Gideon, you spoke a little bit about a few things around PAYE and notifications that SARS sends people, and they don't know what to do with it. So please explain that to the listeners.
Yeah, so I just want to give the taxpayers 2 tips for this filing season. We just started today, is ending on the 23rd of November. So I've realized as recent as last year that SARS is asking individuals to ask their employer to submit their pay-as-you-earn reconciliations. SARS cannot do this. Okay. In my opinion, this is very unethical behavior by SARS, because pay-as-you-earn is regulated by the 4th schedule of the Income Tax Act. That schedule describes a relationship between SARS and the employer. That's your boss, the person
Yes.
paying your salary. Nowhere in that schedule does it mention a relationship between you, the taxpayer, the person where the pay-as-you-earn gets deducted from, and SARS. So SARS cannot ask you to ask your employer to fulfill their obligations towards SARS. SARS got remedies in the fourth schedule that they can enforce for the employer to submit the reconciliations, but they cannot ask this of an individual. SARS, it's just SARS has done it, and it kind of baffles me as well. It kind of throws you off track. It's not written in law, and SARS tries their luck with this, and you're like, how? What now?
Yeah.
And it's difficult to navigate around that because it's not written in law. You've never heard of something like that, and you kind of thrown a curveball, and you don't know what to do with it. If SARS does it, send SARS a letter in the submission of the supporting documentation and say, sorry, what you are asking is governed by the fourth schedule of the Income Tax Act, and I have no responsibility to tell my employer to submit this. Please do your own
Contact the
job.
employer. Contact the employer directly to ask.
Exactly.
Because it's got nothing to do with you. So what you say is, when you then submit, do they respond on the email that they get, or is it better to just do it when they submit their tax return with the supporting documents?
So when the individual submits supporting documentation, when they go under so-called audit, it's actually a review. SARS just wants to review the documentation, and SARS can come back with additional requests.
Right.
And usually, if the employer has not submitted their pay-as-you-earn reconciliation, SARS might ask a question like that.
Okay.
You just tell SARS, no, sorry, it's not my responsibility. You go do your own job. No, you have not employed me to do this.
Yeah, exactly. Okay, so so if you get this, I think about a week and a half ago, I had a client that asked me about that specifically. So that's something that I think they're trying to push their luck, and it's good for the listeners to know about that. Okay, so that is it for today. Was there anything you want to still add, or things that you think would be a good snippet of information that you would like to share before we end off?
Yes, it's a lot to say, but I got to try and keep it very, very small. Home office expenditure in terms of lockdown. A lot of people worked from home during last year, and they think that SARS has made some relief because they had personal expenditure in terms of working from home. SARS has issued an interpretation note, a draft interpretation note number 28. It's very limiting. So if you do want to claim this, I would rather not, because there's a capital gains implication the day you sell your house. There's various things you need to prove to SARS. I'm personally not going to do it.
The cost doesn't justify the benefit.
Exactly. There's too much admin that's going to go in through that. So if you do have it in the back of your mind, but I work from home and I had extra expenditure, sorry, rather not. It's going to be easier in the long run if you just scrap that idea. Lockdown was it what it was. SARS is not in the business of giving free money, so that relief isn't currently there in the way we've hoped it would be.
Yeah. So you would be better off starting a part-time business and then claiming your expenses through that instead of trying to do it through the lockdown that you worked at home.
Definitely.
Okay, Gideon, we are 10:58 now. It was fantastic having you on the show. I really enjoyed our chat. I think the listeners also enjoyed and got a lot of benefit from it. I will definitely want to bring you back. We've got so much to chat. I mean, we can do another hour just on starting a home-based business and how you should do it, and what kind of slips you need to keep, and record keeping, and how do you do this. So we're going to have a few shows, I think. But
definitely, I'm excited.
Thanks for being here. And then guys, again, if you want to get hold of Gideon, Gideon at glsb2b.co.za, or just go to his website, glsb2b.co.za, to ask him any questions there. You are also welcome to follow us, www.retirerichandhappy.co.za, Retire Rich and Happy on Facebook, or Retire Rich and Happy on YouTube as well. All of these shows and more are on our YouTube channel. Just search Financially Raw and you will find it.
Financially raw, real, authentic wisdom with Lawrence Oberholzer from Retire Rich and Happy.